This is the Ecommerce Braintrust, a podcast about building momentum online for established consumer brands. Join our hosts and their expert guests for high-level conversations about e-commerce strategies, trends, and innovations. Access our Braintrust and boost your brand's e-commerce potential.
Welcome back to the Ecommerce Braintrust podcast. I'm Kerry Masters, one of your co-hosts here, and I'm actually recording this intro in Australia. I've been here, I am Australian in case you couldn't tell, and I'm back here for the holidays and a couple of weddings with my family, and at the same time, just being the over scheduler that I am, we did have 3 workshops that we did in Sydney, Melbourne and Perth over the last month in December and January for our local clients and followers of the show. And it was really great to connect with local brands and service providers here who are interested in the Amazon ecosystem or involved somehow. It's a very different landscape here in Australia from an e-commerce standpoint. And before we get into my interview today, I wanted to share a few observations that I've had so far, just being back for 2 months. One is that eBay is actually Australians' first choice marketplace. eBay's website in Australia is visited a lot more often than Amazon Australia's website, but Amazon Australia is making ground against eBay on a website traffic basis. So eBay's been around for a very long time. Australia is fairly new, but I did do, for the purpose of these workshops, I did a little bit of comparison, just looking at website traffic over 6 months in 2018 from May to October. And what I found was on a per visit basis, eBay's traffic has gone down slightly, around 2 to 3%, whereas Amazon Australia's web traffic has gone up around 18%. So still only, say, a fifth of the traffic that eBay is getting, but making up a lot of ground. And if you compare Amazon Australia to other local department stores and supermarkets here, they do have quite a lot of traffic coming in there. So I think that for the slow start that Amazon Australia's had in the year since they launched here locally, and they've had Prime for only about 6 months now, they are making progress, and it does seem to be progressing along the same timeline as what we see in other new markets that Amazon launches in, such as Canada, where it took a good couple of years to really ramp up and be a significant online retailer. So I think what I'm speaking with brands about here is in about 12 months, it will be a really legitimate sales channel for you here. And for clients and companies in the US who are interested in coming to Australia, same principle applies. The population here is a lot smaller than the US, only about 8% the size of the US population. So it's overall a small-ish opportunity. But as a lot of American brands have found in particular, Australians as consumers generally have high disposable incomes. They travel a lot. They're really clued into international trends. And so many brands in the US hear a lot from very vocal Australian customers that they want to buy their products locally. And so if you launch on Amazon Australia, you can use Amazon's fulfillment centers and make the whole process of actually fulfilling orders locally a lot easier. So for that reason, it's become quite attractive for US companies to look at the Amazon Australia opportunity. And that is a fairly long preamble into my interview today with an Australian accountant, Tyler Wise, from my hometown in Western Australia. And it was in response to a number of questions that we've received at Bobsled Marketing about, hey, we want to launch in Australia. What are the tax consequences of us to do that? Do we need to register a company there? This is, there's generally the same kind of questions that we receive about any international launch, but Australia doesn't have a particularly unusual tax system, but it is worthwhile to know the ins and outs if this is a strategic expansion opportunity for you. So we're going to get into all of those nebulous tax questions, thresholds, who the main reporting bodies are, what the sales tax situation is in Australia, etc. So I hope you enjoyed this interview with Tyler Wise from Wise Accounting, and it answers those specific questions for you. And I did also want to mention, with these workshops that I've done in Australia the last couple of months, we are going to be expanding into doing many workshops across the US in 2019. And if you go to our website, we have a new page called Events. And if you go there, you can see all the cities that we'll be visiting in 2019 to do lunchtime workshops about Amazon. If you go to that page, you can see which cities we're visiting, sign up for those events or register interest in updates and get to meet us in real life. So let's go. So I'm here with Tyler Wise, who's the director of Wise Accounting in Australia. And Tyler and I go way back. We actually went to the same high school. And so Tyler's a good friend of mine and also happens to be a CPA in Australia as well. So thank you for coming on the podcast.
No worries. Thanks, Kiri.
So Amazon launched in Australia about a year ago, and it's been a slow burn to get started. Before we started recording, I was just saying to Tyler that the challenge with a marketplace, of course, is building up both sides of the marketplace, both supply and demand. So enough brands and products and assortment to keep shoppers interested, and then also enough shoppers to keep brands interested. So there has been a slow burn, but that's typical Amazon style when they launch into a new marketplace. And I think that things are really going to take off in the next year or so as Amazon starts to launch initiatives like advertising, promotional vehicles, adding more products to their first party or vendor assortment as well, and starting to get more competitive with local retailers. So with that said, in this episode, we're going to be talking about the topic of tax and compliance in Australia and what sellers need to do when they're thinking about launching in Australia from a tax and compliance standpoint. So Tyler, if you could help to set the scene with what the Australian tax landscape looks like, specifically for companies that import and sell consumer goods locally.
Yeah, sure, Kiri, no worries. So there was a proposed change from 1 July 2017 for the GST to be applied to these low-value goods, being goods less than $1,000. Now that sort of got deferred and it's come into effect from 1 July 2018, and the first reporting period has just ended, being the 30th of September 2018. But what the change has really meant was that previously when goods were sold to a customer in Australia, now if they're less than $1,000, there was no GST, and if it was over $1,000, GST.
And GST is goods and services tax.
Goods and services tax, sorry, yes.
Thank you.
Which is a flat rate of 10% and payable essentially by the end consumer and remitted by the seller back to the Australian Tax Office. So it is an internal tax. If it's a business-to-business transaction, when you pay GST, you're entitled to claim it back. So it is really only the end consumer that pays the GST to the government. But in the past, if it was over $1,000, it would be the goods and services tax would be assessed at customs at the import, and the end consumer would pay that and essentially pay it to the importing agency. So it didn't really impact the seller at all, especially if they were a non-resident seller. So the new system is designed to essentially level the playing field from a retail perspective. Obviously, a lot of Australian businesses were failing to compete with some of these international sellers, mainly because the goods and services tax being 10% is essentially a significant margin in comparison. So if I'm buying something for $990, inclusive GST, the Australian supplier will only see $900 of that, but to me, it costs $990 versus a foreign seller will sell it for $900, no GST. And again, same profit margin to the end seller, but for me, it's $90 out of my pocket. So it was really difficult for Australian businesses to compete. And so the government has introduced this from 1 July to make GST applicable to foreign sellers as well. Same rules that apply to the Australian businesses apply to the foreign businesses, just it's a little bit more simplified. So I'm going to just sort of get into some technicalities, and I hope it's not too boring for everyone. But basically, there's sort of four things that will need to apply before GST has to be remitted on these, or charged and remitted. So the first is that there's got to be an offshore transaction, so something has to be brought into Australia, and that can be as well arranging those goods to come into Australia. So simply getting more hands involved in the distribution channel doesn't necessarily exclude it, and the government do have
like a reseller or a distributor locally.
That's right, and so they look back to the first point who arranged the transaction, and from there that's who would need to assess the GST. Interestingly, though, I know it's commonplace in Australia for those products that say Amazon won't ship to Australia to have an American address, say, and then have that forwarded on. In those situations, the government will assess the forwarder, and you'll need to remit the 10% there. There is a little catch on that it would impact those suppliers, if we call them that for the purposes of this, a little bit more, because they would need to remit 1/10 because the price hasn't had GST on it, so they've got to find 10% and give that to the government, versus if it already had it on there, it's 1/11. So it's really a matter of probably those forwarding sort of, I don't know what you call them, businesses as such will probably feel the most impact, and whether or not they're sort of viable going forward is questionable.
Mm-hmm.
But again, we won't get into that too much. So essentially, yeah, the good needs to come into Australia and be ready for consumption in Australia. And the same goes, it doesn't matter if it's a physical good or an electronic distribution, sort of those things are still deemed to supply. So that's the first test.
Yep.
The second test is that the goods need to be below $1,000. If they're over $1,000, then the previous import duties and the like will apply, where it's assessed essentially at the border. So if it's less than $1,000, these new rules apply. If it's greater than $1,000, the old system is still applicable. The third point is that the supplier needs to have an Australian turnover of $75,000. So if they make a one-off sale and it's $900 to Australia, and that's the only sale for the year, they don't need to worry about this GST being charged.
So just for our American listeners, turnover is revenue, and is that assessed on the Australian tax year, which is July to June?
It is, yeah, July 1 to 30th of June. Having said that, though, when it comes to GST turnover or GST revenue, for calculation purposes, as soon as you are aware that you anticipate to go over that $75,000, you're required to register. There is a calculation sort of more or less as soon as 1 month exceeds 1/12 of $75,000, you should really register. But again, if you've got evidence that that month represented an anomaly, wouldn't occur again, then there's no need to register. But so you do need to be mindful that if your importing to Australia is starting to ramp up, that you may need to register in advance of, despite not hitting that $75,000 just yet.
Got it. And just to go back to the previous test that you mentioned, just so I'm clear. So if the value of the good to be sold is going to be, is it that it's going to be sold at below $1,000 Australian? Like that's the retail value?
Correct, yes. Yeah, so what the end consumer would pay.
Then what the end consumer would pay, if it's less than 1,000 Australian dollars, then the GST would be assessed to the customer. And that's kind of like in the US, we have sales tax in most states. And so you'll have the price of a product, let's say $99, and then you'll have, in New York state, 8% on top of that. And so you'll see the original price and the tax, and the customer will pay that 99 plus the 8%, and then the business will remit that to the government quarterly. That's kind of like what's happening in Australia with products under $1,000, but over $1,000, the GST is collected when the goods come into the country. Is that correct?
That's spot on. So the first example is exactly how it occurs in Australia. And then the second, again, if it is over $1,000, this new legislation doesn't apply. So it would be assessed by customs, and again, the end consumer still pays it, but there's no reporting obligation from let's just call it the American company at this point.
Right. Okay, that makes sense. And so you mentioned that there's 4 tests. What's the last one?
Yeah, so the last one is that so obviously the supply needs to be connected with Australia and is a non-business transaction. So if Wise Accounting wanted to acquire something from an American company and it cost less than $1,000 and they had turnover that they would require to be GST registered, I could provide a declaration saying you don't need to pay me you don't need to charge me the GST because it's a business-to-business transaction, because at any rate I would simply claim back the GST. So it's about But why they're trying to make sure that they are collecting the GST, they don't want to put up barriers to doing sort of worldwide business. So instead of an American company having to remit the GST and then claim it back, they're saying just simply let's just negate that transaction. There's no GST on it as long as the American company receives a declaration from the Australian company saying that this is a business-to-business transaction. So again, they're really just trying to get that private consumption transaction to have GST on it to level that playing field between businesses.
Right. But in that example, if you as Wise Accounting turned around and then sold those goods to Australian customers, you would have to be collecting GST in that situation, right?
Correct.
Yeah. Okay. Got it. Good. Well, I think that is to make the parallel with the US system at least is something similar to sales tax, but the difference seems to be on the value of the goods, the finished goods to be sold to customers, whether it's over or above $1,000. And so is there anything else that you wanted to add to that, Tyler, before we move on?
I think just the fact that once those tests have been satisfied and you do need to become GST registered, you do need to, on your advertising, website, products, or everything that it needs to have a GST inclusive price. So much like when an Australian business is selling something, it's inclusive of GST. And so that needs to be illustrated. So that will be the
right.
How that gets policed. I'm not 100% sure, because if an American website doesn't say, inclusive of GST, I don't quite know what the repercussions would be. Mm-hmm. But it'd be as simple as saying, you might put a disclaimer on your website that all prices are inclusive of any national taxes that might apply or whatever it might be. But there's those sorts of things that the government are trying to make sure so that consumers don't then go make the transaction and there's a tax at the end that they're unaware of. So again, just trying to keep it all similar to when an Australian transaction occurs on a .com.au website. Everyone knows that they're inclusive of GST where applicable.
Right, makes sense.
Then the difference is as well, so an Australian company would have an ABN, which is an Australian business number, and then they would GST register, and there's a whole bunch of reporting requirements to go with that on a quarterly basis. For a non-Australian business, if they need to GST register, they would just simply get a GST ID number and then they remit the GST that way. So it's certainly a lot less complicated than if it were an Australian business. It simply just is the GST that was collected from Australian customers and you cough that up to the government.
So skipping ahead to my questions here a little bit, you mentioned that you don't need to be filing anything until you get to turnover or revenue of over $75,000 in a tax year. But is it at that point that you need to start filing, or at that point that you would consider setting up a company in Australia?
No, so it's once you reach $75,000 or anticipate to reach it, at that point you need to commence registering, charging GST at that, and remitting from that point onwards. So it can be mid-quarter, any point really. There is a grace period if you have ticked over the $75,000 or anticipate to, and we're a bit behind. There's a 21-day sort of period where they won't assess you on it. You just need to register at that date. So you've got 21 days sort of behind a transaction to see if it should have had, if you need to be registering for GST.
And will you need to remit taxes on that retroactively? So for the $75K in sales that you had up until that point, or is it really just going forward?
No, it would only be from the date of registration, yes. If you did miss that registration date and you decided to run the gauntlet, if the ATO were to catch you, so to speak, they would assess you GST on the entire year's worth of sales. So that's why it's really important to make sure you're keeping a handle on what your Australian turnover is or revenue, making sure that registration is up to date more or less.
That's a pretty good incentive.
Yeah, because 10% is on retail is a significant margin to sort of give up.
Yeah.
Yeah, it'd just be horrible if it's sort of $6,800 on 75,000 that would just walk out the door, and probably be the difference between doing business in Australia and not.
So what's kind of a list of things that a non-Australian company would need to do to start importing products to sell on Amazon Australia and be compliant? Like what would be your checklist?
Yeah, so it's not too difficult, thankfully. So I think assuming that once the turnover, you're aware that it will believe it will go over $75,000, then obviously you just need to get a GST number, which is just by the government. It's a very straightforward process. It's just a matter of verifying the legal entity. A lot of people sort of probably could do that on their own. But having said that, that's those that are familiar with the terminology in Australia. So to a foreign company, it's going to be a lot of acronyms, and they might not make a great deal of sense. But it is not a
ATO, GST.
yeah, among others. I think
Turnover.
I don't know whether they're just showing off or Australia is just such a big word that they prefer just to use those acronyms. But I mean, I wouldn't feel comfortable filling out an American form, so I can understand there might be hesitation in that. But yeah, those sorts of things are fairly straightforward, even though they might not look it. And then it's just a matter of sort of completing the quarterly activity statements. Now, once you register for these things, the ATO send you that information. So they'll either, a lot of the times now, it's done digitally. So they'll send you an email, saying your activity statement's ready for digital collection. And because of the simplified reporting on these situations, it would really just be a matter of declaring your Australian revenue and then remitting 1/11 of that. So fairly straightforward on that front. Like I say, you can submit it electronically, so you're not really having to worry about paper. And then payment is that the ATO have gotten with the times and realised that they're dealing with foreign residents, so credit card payments can be accepted on those. And I believe the fees they've reduced those on those situations. So typically when Australians pay their tax via credit cards, there's a little bit of a higher fee, and also which is designed, I believe, to stop, because we all want our frequent flyer points. So you don't get those from the Australian banks anymore when you pay your taxes.
Yeah. It's nice to have that option, though. I have, the number of checks and paper returns I have to file in different states, and the number of US government departments that still require a fax to be sent is, yeah. Oh, yeah. So when would you suggest it would make sense for an international entity to actually set up an Australian corporation? Like, what would be the tipping point?
Yeah, I think, thankfully, this system, even though from the outside it might seem a bit arbitrary and unnecessary, but thankfully one thing they have got right is they haven't made it so you need to really establish an Australian connection in order to do business in Australia. And the point when you might need to become an Australian entity for tax purposes is really only going to be when the cost of doing business in Australia perhaps is starting to increase. And so where that would be is that you might be engaging a lot of Australian businesses to assist on the Australian side of things, and where you might want to then get an Australian division in the company, or at least an Australian entity of some sort, is so you can get back those GST credits. So if, for argument's sake, an American business was engaging Wise Accounting, we still need to charge GST on our invoices. Now, there's no benefit to the American consumer of that, even though, because the service is provided in Australia, we have that connection with Australia, we still need to charge GST. There's potential workarounds whereby if we were in America providing our service, then we wouldn't need to charge GST. We won't get into that because that's going to be very rare. But so in those situations, there's an additional 10% or 9.9% whatever that is applied to the American supplier that's of no value to them. So if there was multiple transactions such as this, whereby a lot of Australian businesses were invoicing an American company, at that point they may wish to then establish an Australian limited company, and then that way they can get back those GST credits, because despite having a GST number on the importing, that only allows you to remit not the genuine goods and services sort of arrangement whereby you remit your GST on revenue and then claim it back on expenses. So,
okay. And then if you set up a corporation, you're eligible for those GST credits. Are those able to be claimed retroactively as well, or only once you set up the corporation?
No, only once it's established, and especially given, so when you set up an Australian company, there's a data registration and certificate of incorporation, and from that date, really the earliest you'd be able to claim any credits, especially given, so ASIC, which is the Australian Securities and Investment Commission, and the Australian Taxation Office work quite closely. They would be, if you got a bit cute and tried to claim something retrospectively, you'd probably be walking a fine line, because those two government bodies speak quite closely, so you could end up sort of target of an audit.
Mm-hmm. Right. It's a pretty small country. They're able to track everyone pretty closely. So tell us about what kind of services you offer at Wise Accounting for individuals and entities in this situation.
Yeah, no worries. And just probably, Kiri, if I could just, one thing just that I know that a lot of people try and potentially outsmart this new tax, and they might be thinking, I know, who would ever do such a thing? Is the Australian consumer law and the ATO, more or less, there's legislation everywhere, but essentially if you were to create one entity and then once that entity got close to $75,000, stop trading through that entity to Australia and then create another one and trade to that one to avoid this tax, the ATO, we have sort of a look-through provision, and we group more or less. If two entities are controlled by the same ultimate individual, I won't get into those tests, but then they're grouped as one, in which case the GST would need to be assessed at that point. So simply having a plethora of entities wouldn't get around this tax, and also potential for phoenixing.
Raises other questions as well. It raises other questions as well for those bodies that are looking into it.
How do you mean?
Oh, I mean, like if they're looking at the common owner across these various entities, and it might compel them to look a little bit closer at the books for other things.
Oh, absolutely, yeah. Once they sort of get their hooks in and they decide to come and have a look, they're going to look at everything. So yeah, and it would just be it's just one of those things, and they'll probably assess you on just about anything and everything, and it can carry up to a 75% penalty. So if they were to find that you had knowingly, let's say, gone over $75,000, not given them a cent, so they would assess you the $6,818 in GST, and then they would also potentially assess you 75% of that again as a penalty. So they can be pretty strict, and we've seen them being particularly aggressive just in our own backyard. So that's probably the biggest thing to be mindful of. Those sorts of getting around it is more or less you're allowed to look to the ultimate person and sort of get it from there. So that's probably the biggest, I guess.
Okay.
But as to your question, as far as what we offer, I mean, we offer the full suite of sort of compliance services. Typically, it's built in with our business analysis services, which are really what we're sort of known for and big on. But compliance is still, if you're going to be an accountant in Australia and with the changing tax law, you've still got your bread and butter is still very much dealing with that. So as far as the reporting and lodgement obligations on this is really where we would be able to be of assistance. And then, if need be, getting an Australian entity registered. But having said that, in full honesty, the system is designed to be fairly simple, which is a good thing. And whether or not, if a foreign company were to engage an Australian accountant, I do honestly believe it would be only short term, because the system is quite simple and straightforward. So it might just be an understanding of the terminology, the reporting, and then it is something that really could be handled personally. So again, I don't think the idea is to line accountants' pockets with fees with this law. It's simply just about looking after retail in Australia. So yeah, while we could get involved definitely at any point, I do want to stress to your listeners that it definitely isn't daunting, and it's something that, while there might be an initial cost, it's something you could probably claw back at some point.
Well, that is great news. Thank you for that. So where can people find you if they want to get in touch?
Yeah, probably the best place is, I think, our website, so wiseaccounting.com.au. That's got all of our contact details and all of our bits and bobs, media and the like. Otherwise, we're active on all the social media channels, which everyone is with all the noise is. But yeah, email, website, probably the best points. Yeah.
Okay, great. Well, thank you so much for coming on the show and geeking out a little bit on Australian tax requirements for international brands. I appreciate it.
No worries, Kiri. It was my pleasure.